right, guys. Thank you for joining us this evening on our public forum for giving you a bit of more insight into our business and what H2O Securities is about. And I just want to give you a quick overview of what this meeting is about. Give me a second to put my phone on airplane mode. All right. So the purpose of this meeting this evening is to share with you where we are in the business, what we are doing, so that you understand what we are on about and where we are at in this time frame of the business. I'm going to share with you a very quick agenda and also some housekeeping rules. Do we have the same raising of hands scenario that we can do on Telegram? Same scenario or not?
Yes.
Okay. So if you have a question other than the questions that we have posted here today, please just click on the button to raise a hand so we can ask that question or unmute you to ask the question.
The screen isn't sharing properly. It's not showing.
So it's not sharing properly. Okay. It's sharing now.
Just wait. Take some time. Yes.
Sorry, guys. All right. So on our previous discussion, we were talking about listing the company on the London Stock Exchange. We had several discussions in terms of our decentralized and centralized exchange activities that we're busy with, our technology demonstrator, and current business that we have on book. I also want to share with you tonight just quickly what are our current listings and the way forward that we're busy with, and then open for some questions on our business. So let's do that. So on our London Stock Exchange listing, we have gone all the way in this process. We have signed the necessary agreements for the reverse takeover of this particular company on the LSE. We came very, very close to buying the business. We gone through the entire contract process of buying the business. At the end, as part of our due diligence exercise, we decided not to continue with the purchase of the company, simply because we realized in the due diligence process that there will be too many things that is unclear to us. There are too many things that's unclear to us, and there's too much additional costs that we would need to consider or make provisions for of this particular company in order to continue with the transaction. So we decided in the end to go against it. So we're not saying that we will never list again, or that we are not planning to list on another exchange like the Nasdaq or any of such a nature, but we are putting that on hold for the moment for a much better deployment of our capital. Then let's to give you an understanding of where we are in our DEX and centralized listings. That's okay.
Yeah.
So at this point in time, we are focusing on our decentralized exchange listing heavily because our entire tokenomics model, our entire smart contract model is based on the algorithms locked up in decentralized exchanges. The centralized exchange is designed for our purpose, provides us with additional liquidity, or is supposed to provide us with additional liquidity for our token holders to sell our tokens and so forth, or trade tokens. However, as you guys may have seen in our Bitmart scenario, we had a little bit of a bad experience there. We did not achieve what we wanted to achieve. We had a very negative trade bot on our platform for a long time that resulted in our negative sales. We got penalized severely if we did not close the gap between the bid and the ask. And if the bot continuously gives lower purchase orders, but not one of our existing token holders wanted to sell that low, then Bitmart penalized us if we did not close the gap and actually issue treasury tokens to reduce the price. So it came to a point where we absolutely refused to do that during the last couple of weeks. And that resulted in a standoff between ourselves and Bitmart saying, well, in that case, we are not going to try and reduce our price any further. If you want to delist us, but that we're not going to reduce our price any further. So we've put all other centralized exchange listings on hold for the moment. simply because it is a very, very costly exercise to list on a centralized exchange. Listing is one thing. You can list for as low as $40,000 or $20,000, and you can list as high as $600,000 or $1 million. The point is not to list. The point is to list and to stay listed. And number one and number two is to have a market where you are listed, where there is sufficient real, and with the exclamation mark or the pronunciation on, real buyers on the market, not automated bots, not bots trading against themselves, just automated market making bots and so forth, but real organic buyers. If there is no real organic buyers on the market or traders on the market, then it is absolutely, frankly, pointless to list on that exchange, because it will not benefit any one of our token holders. And that is a big problem that we discovered on Bitmart. That's why you'll see in many of the graphs in the last month, there was a complete flat line when we eventually withdrew all liquidity from Bitmart, and when we eventually stopped the bots from trading, the market completely flatlined. Simply, why? Because there was no real human traders on the token side. So we did not achieve the market exposure that we wanted to achieve on the Bitmart listing. Long story short, we are at this point in time hidden. They're not giving our deal pricing through to CoinGecko and CoinMarketCap at this point in time. We are completely okay with that. Hopefully, we can restore our relationship with Bitmart to a bit stronger level when we can add a substantial amount of more additional liquidity to the market to keep the price high. But what I wanted to achieve in the last couple of weeks is to actually really demonstrate to you as our token holders what the impact is when we add water plants to the network. So you will see when we did our technology demonstrators, we had right in the beginning, we had a plan to list or to link one technology demonstrator in South Africa and one technology demonstrator in Texas. These two technology demonstrators were of a very small capacity and were, in all respects, basically the same type of plant. We changed that tactic slightly by adding two additional technology demonstrators in South Africa, which are of significantly different capacities and different technologies, more complex plants and more sophisticated plants with more than one input and output, and that's tested a number of things in terms of our smart contracts. Can it cope with different parameters or input parameters and not just with one type of input parameter? That we demonstrated significantly. And also, by adding a larger capacities, you can clearly see the difference or the impact that those two additional plants had on our token price. That is very important, and I'm going to get a bit more into detail of the technology demonstrators in a moment. Business on book, guys. We have a significant business in our pipeline. At the point of listing, at the time of listing, we had 2 signed contracts for our very first major water plants in excess of 20 million liters a day each, to be connected to our water network. Those transactions are still on book. However, we have significantly more transactions on our book at this point in time, because we always anticipated that we will roll forward with new plants coming on stream by the end of December, beginning of January, first quarter next year. And so that is on book, that is in our pipeline. We are in the process of finalizing those agreements as we speak at this point in time. All right, so just to give you a perspective, which is very, very important here, there are roughly 23 million tokens in circulating supply. Those are tokens which are not necessarily part of a long-term lockdown. They're all part of vesting contracts that vests over a period of 2 years at a constant rate. They are mostly investing contracts with the initial investors of the business and the initial VC companies that is part of the business. So just to give you a perspective of the total amount of token sales that was done from our tokens from pre-listing wallets to wallets that we do not know who they are, meaning these were outright sales. Roughly about 413,000 tokens were sold in this process. At the same time, there were about 325 additional purchases that happened on the H2O platform. This is roughly 2%. Now that is phenomenal. That means that the bulk of our token holders did not sell. That means the bulk of our token holders, the bulk of our community is actually supporting this project and this initiative and are holding the tokens. The sad part of this is that the bulk of those sales, 63% or 260,000 tokens, were sold by one whale holder. And this is a whale holder which is a VC company which did not have their tokens and refused in the beginning to have their tokens as part of a vesting contract. Now that has clearly had the impact that we did not want on our token price. Apologies, guys. I'm just going to drink some water quickly. And we only discovered this as part of our forensic investigation. Remember, a couple of weeks ago, we said we are taking legal advice in terms of what our findings were. We found that these guys are using multiple wallets through which to trade their tokens to try and hide their methodologies that they are using. Long story short, we addressed the matter with the VC. We are hopefully they have ceased any further sales, and that was very important. This happened about 2.5 weeks ago, and as you can see, as a result of that, what is important to notice of that result is what has happened. Oh, man. 2 weeks ago when we stopped this process, or roughly 2 weeks ago when we stopped this process and started connecting additional plants, you could see the upswing here. And that is significant, and I want to share with you why is that significant. This is done by 3 POC plants. The total of those plants, the capacity total of those plants are less than 2 million liters a day. Now, if you look at our white paper, and you look at our strategy, we aim to do between 20 and 35 million liter a day plants per year, or more than 100 milliliters a year. Not 2 million, 100 million plus per year. That is our target. That is our deal flow pipeline. That is what is possible in our business model. Now, if 2% or 2 megaliters or 2 million liter plants has had roughly a 47% change in our token price, imagine what a 100 megaliter plant or 100 megaliter plants can do to our token price. Even if we do lift or increase the token liquidity on H2O pro rata. So we will lift the token liquidity pro rata as we add more plants, so that we maintain a very, very strong increase in our token price going forward. So I just want to share with you, this is very, very important when our plants are connected algorithmically properly to the network. We have significant token demand on our tokens going forward. So we've had a number of questions in terms of where are we going to fund our projects? Is it only in Africa? Is it only in third world countries and so forth? And the answer is no. We have a heat map of the entire world of where the key areas of major need is for water. We have a database in excess of 57,000 plants in this space, knowing exactly where those water plants are. And we have a very decent data model on those plants in terms of what types of water they have. We have an understanding of what are their schedules of upgrades and where they are. What is the total budgets for each of those plants? This is significant market research data that has gone into obtaining this. We've also got a very, very clear understanding which of those plants in which of those areas are for rehabilitation or upgrades or refurbishment, and which are brand new plants. Why is this important? Because if you have a refurbished plant, you buy an existing cash flow stream, you buy an existing operation, and you can refinance an existing operation to build more capacity. So that is important for us. And so we've got a really, really good understanding of where we are in terms of our plants and where we want to go to. Also in terms of our pricing of each of these areas where we are at. We have a thorough understanding of these pricing. This is important, guys, because we had a question about our current POC is running at roughly about 24 cents. We've put that down as a benchmark, bearing in mind that water is not priced everywhere in the world at exactly the same price. So even though our objective is to reduce the cost of water, we have to address the financial risk of being involved in certain areas of the world and price that risk into the water price. That means we will be lower, significantly lower than what the local borrowing pricing would be in the local area of that particular water plant. So we maintain the objective of lowering the water price, but it will not necessarily be everywhere the exact same price. So it's a lot more complicated behind the scenes than just simplistically saying it's going to be 24 cents across the board for the water plants. So guys, just to give you perspective, I'm just want to go back to one slide quickly, which is very important, which I skimmed over very quickly. Okay. This one. All right. So the total market that we're aiming for a very particular sector of the market, whereas this market is 68% of the market of the water space. That is roughly about $500 billion in size per year. Now, we are only aiming for 0.1% of that market to be part of the H2O Securities funding mechanism. Not 100%, not 50%, not 5%, not even 1%, but a tenth of that, 0.1%. That is our target market. And that is $500 million business per year. That is what we are talking about. So that is our target, and that is what we are aiming for to achieve in this entire funding model of ours. So to give you perspective of that, that means we are aiming to do roughly about 10 billion liters of water per day, serving about 100 million liters of new potable water per day to people. Now, our journey has already commenced. The fact that we are listed is one aspect. The fact that we have our POCs is already there. The third thing is that we have significant committed capital in the form of two elements. One is token purchases. You've all read about the whole announcement in the media around about end of July, beginning of August, about this major VC fund that has purchased or invested $150 million into H2O Securities. That is fundamentally true, but it is a token purchase agreement. We are not sitting on $150 million in our bank account. That means we can say to the fund, guys, we have this plant to finance, and we want to draw down $10 million to finance this particular plant. So that is what that is about. That contract also only allows for up to a maximum of 30% of their capital to be deployed in a water plant through a pure token purchase. That means we are still requiring 70% to be funded via traditional financing models. So we are doing what is called a blended financing model. This is a very complicated environment from an investment banking point of view, and I'm not trying to explain it too much level of detail here on this particular forum this evening. But all I want to say is, so we had to do a number of things: list the token, get the token purchase agreement sorted. Thirdly, get the POCs done. Fourthly, we had to get traditional financing companies on board, which is what we have done. I've recently spent a lot of time in Egypt, and in Egypt, apologies guys, in Dubai, and there was a major investment roadshow. We had 14 different companies participating in H2O Securities' investment capital. We have not had one negative, and there will be a lot of announcement towards the latter part of November on that funding scenario. We have signed the agreement last week before my return from Dubai. We have registered the H2O Securities Global Water Fund in Dubai. That license to have a licensed fund that is being issued at this point in time. It is with the authorities, and we are aiming to have that license in hand by mid-November. So just so you understand, even though today we have crypto finance out there, and even though today it is at a massive growth rate, the adoption for the main line institutional investors, the hedge funds, the pension funds, the banking institutions are not yet there to just dump money into crypto. So we've always maintained that the ratio will be for our starting block will be 90-10. That means 10% crypto finance, 90% traditional finance, and a blended scenario of that. And over the next 3 to 5 years, as adoption of cryptocurrency continues to grow, that will blend into 50-50 type of scenario. So our blended financing model has always been on this basis. So what have we done is we've created the fund. We have a number of investors participating in that fund, which will be announced during the course of November, towards the latter part of November. These are the funds around the world that are participating in that. There's a lot of names on there that I cannot share with you right now. They will be announced as part of press releases towards the latter part of this year, November. These are the regions which the funds are going to be active in, which includes Latin America, North America, East Asia Pacific region, Sub-Saharan Africa, Europe, Central and Middle East Africa. Many of you may know exactly how a partner fund structure works, which means that there are limited partners and there are general partners. H2O Securities is on all instances the general partner, and then we have the limited partners as the institutionals that are actually putting down the funding for this particular project of ours, H2O Securities of ours. You will hear some big names happening in November that we are going to share on this matter. Our fund consists of 3 tiers to fund the entire end-to-end process of a water project. That means from startup to construction to long-term operational environment. And the fund loops through this process for different kinds of funding for different kinds of institutions at that point in time. This is the behind-the-scenes complexity in managing the entire roadmap of how our funding model works. So to cut a long story short, we are at the point in time where we have both sides of the coin at this stage. So we have the cryptocurrency funding in place. We have the initial funding in place to finance this year's projects in place. We're just waiting for the fund license to come through in November, and then we can actually start getting our first real production plants on stream by end of November, beginning of December, as per our original roadmap. So I'm really excited for that to happen, and I'm positive that will happen, and it will be for the benefit of all of us going forward. So we have a number of questions. I didn't see. Can I see the questions here on this thing? And I can't. I can't do it yet. All right. So I'm going to start answering some of these questions on the list here that we have. So there are some very, very good questions here. And if there are more questions, Milton, you'll just alert me to that. Is that all right?
Yeah.
Okay. Cool. All right. So let's start with the first question. Here, this question poses the matter about the 24 cents, and I think I've addressed it during our presentation that not all plants will be at 24 cents. It really depends on the region and the structure of the deal of how that works. So it's not always the 24 cents that will be part of that. Yes, these costs will be will be to benefit the holders, and yes, it's still on an hourly basis. This is also important. Due to the nature of water purchase agreements, they are not always on an hourly basis, but they are definitely on a daily basis. So you typically measure water production in daily rates. So so we will have a set off and a calculation on a daily basis. That will typically happen around about 0000 hours UTC, and then the purchase will take place and the distribution will take place. We will monitor that process because we do not want to have major price spikes at one particular time frame in the day. So we are sticking originally to the hourly rate and to the hourly purchasing process until the bulk of the plants are online. But we will keep you guys posted on how that development works on that. Okay, I mentioned there the 2 proof of concept plants. No, these plants are not in our targeted size of plants. Our target size of plants is in the range of 5 megaliters to 20 megaliters, with the exception to do 50 megaliter plants in one go. That means, and we are aiming to do 20 to 30 of these types of sizes of plants per year. So we have an annual forecast of the types of plants that we want to and the total volume of plants that we are going to finance the following year. So we complete the fundraising, the capital allocations during the previous year for next year's types of plants and so forth. So that's happening on that. Guys, there's a lot of questions around our DAO structure. May I ask that we park the DAO structure questions till the next occasion, that we can purely focus on the DAO structure, because the DAO structure is very important because it involves the broader community's participation and on a lot of things. And I want to spend quality time on that rather than try and just answer a very quick question or 3 on the DAO structure. And we'll put out some writing and some material on that as well to help with that, to explain a lot more around that going forward on that. All right. But I want to answer one question in here. There's one question here about the participants in the network. So the participants in the network is key. These are not plants. So JVDB, the question that was, are participants also water plants? No. A water plant is a water plant. It is the generator of the demand for the tokens. The participants in the network are actual physical entities and people who are responsible for making that plant work, to operate that plant, to maintain that plant, to oversee the construction on that plant, to do operational excellence consulting on that plant, to do the legal framework for that particular plant, the environmental consulting on that plant, the engineering, front-end engineering, and so forth on that plant. So these are physical people that participate in the actual construction and operations of a physical water plant. These participants can go onto our platform, and they can select whether they want to be paid in USDT token or in local currency. Again, our treasury back office handle all of that settlement process for them, but they can get paid in H2ON. Now, we can't at this point in time absolutely forecast how many people will want to get paid in H2ON, but certainly if the price trajectory is positive, then a lot of people will want at least a portion of their funds paid in H2ON, because they will significantly gain on the upside of that. Okay, so water users. This is a very important question, and the question is also who pays and why do they pay in H2O tokens. Right. So we want to circulate fiat in our business model, because if we circulate the fiat currency in our model, it means we can use the fiat to purchase new water plants and add more water plants to our network. So we're circulating the fiat constantly to purchase more water plants. That's number one. So when we finance a water plant, we will finance it in dollars or USD in fiat, but it's part of a future H2ON contract purchase. And that means the following: that for the next 15 years, 10 to 15 years, that plant owner pays back his loan in the form of buying H2ON on a regular basis. That is the model. So they have to purchase or pay for their loan in H2ON. Where do they get that H2ON? Well, they get that H2ON through our smart contract that purchases it from the DEX. That's one way of that's the primary means of how they're getting their H2O in to settle the contract, and that's how you will see how that portion works on that. Guys, yeah, so I think I've addressed the committed capital component in terms of 300 million, 450 million. As I said, that's not in our bank account, but that means that we have drawdown facilities, very, very strong, very powerful, smart drawdown facilities that we've got in place with these VC companies. And that's on the token purchase side. So we've resolved that part of the business. We don't need much more of that. But what we want now is more traditional financing side. And we've signed the first contract of that nature last week during my visit into Dubai. Correct. So there's a question here in terms of the 100 milliliters of water per day. And that ties into the 10 to 50 plants, depending on the capital and the size of the plants. 100% correct. I've addressed the token price of 24,000 that we've done. The roadmap, right? That's right. This is a good question. The question is how long is the time frame between the rewarding of finance and the actual plant being up and running? I love this question. This is a very, very significant question. And it comes down to risk management. For very large plants, water plants, you can be tied up in a construction period, anything from 1 year to 3 years. Now, we are not in that market space. So when we analyzed that map, the world map with a heat map on where all the difficult spots in the world is, we have analyzed we've overlaid on top of that roughly 57,000 plants. And then we wanted to understand where is the 1 sigma deviation, or 68% roughly of all plants. Where do they fit? Is it in the 100 megaliter plant capacity, the 200 megaliter plant capacity, the 500 megaliter plant capacity, or the sub 1 megaliter plant capacities? And it is slap bang in the range of 5 to 20 megaliter plants. That's where 68% of plants around the world is. The number of plants in the world is based on. That means the following. If we zoom in just on those kinds of plants, now we are looking at construction periods of sub 12 months. We are looking at construction periods of 3 to 6 months typically for those kinds of plants. What is important here is the following. H2O Securities does not go out and tender and bid for finance. Our deal flow comes from our network. It comes from the EPCs and engineering companies who have been tendering for plants, which takes anything from 1 year to 3 years to get a tender awarded. So from the moment that the tender is awarded, that's when our financing component kicks in. So we are not subject to the tendering process. We are only post-award finance. That is where we come into play. So we're not part of lengthy tender programs and tender cycles and so forth. Okay, there's another very good question here. The question is, do we aim for projects which are slightly more risk? You are right. How did H2O Securities start? H2O Securities started when we, before the crypto component, before we brought out the token, we did this model on actual real world water plants. 7 years ago, when we started this project, we were actually involved in projects of water plant finance that could not be financed because the plants were too old, too risky, too dated, and no bank wanted to touch the plant. With our modeling and the way that we have refinanced those plants, we could refinance those old aged plants for more than 15 years. So that is our IP. That is the model that we have transformed to leverage the blockchain efficiencies, and that we are implementing using H2O Securities and the token. That means that we can go to any type of plant, even new technologies that has not yet been proven. If we are able to manage the risk within our blockchain methodologies, then we can finance those plants. This is significant, ladies and gentlemen, because it means through H2O Securities, new technologies that are more cost effective, that are potentially yet unproven, can be financed through this platform. That is why we are so excited about actually running this through blockchain and through this particular tokenomics model. Yeah. All right. This is a good question again in terms of our DEX and our centralized exchange strategy. So for me, for us on this side, I think the important factor is where do we and where will we get the most liquidity for our token holders? And yes, the aim will be to go to the level of Binance in the end. That is our ultimate where we would like to list. We will grow into that. We are in that process. And I think there's a good question here in terms of what is the roadmap look like for that? And I think the roadmap will start with our capitalization that we are busy with right now. So by the end of November, if we have, when we have our fund license sorted, we will know what capital is available for providing additional liquidity, and we will be able to give more feedback on that. So I'm hesitant to put a roadmap down right now that we cannot stick to, because I would like us to put a roadmap down that we feel comfortable that we can achieve, that we can actually really achieve, and we don't just put out a lot of BS out there to the market, but that we put out something that we can actually really deliver on. So bear with us. The moment we know what our capitalization results look like by the end of November, we will be putting a bit more of a stronger roadmap in place for that. You are right in terms of the 3 million tokens with large. This is a good opinion as well. We do feel that the project is still quite undervalued, which is a good thing, because it means that the token prices that we see today will hopefully be the last of the token prices that we will see of this nature. I remember in 2012, 2013, when I had a number of Bitcoins, which I purchased for roughly about $200 odd. And because in South Africa there was no market for it, so I couldn't use them. So I just dumped them, $270 a Bitcoin at that point in time. I can kick my butt today for that. And hopefully this is exactly the same for this H2O in token. Guys, I have been in Dubai where we had the world's top institutional financiers, top family offices, and each of the UAE's royal families involved in presentations on H2O Securities. We are going to corner, we are in the process of cornering significant capital, TradFund, traditional finance, blended with cryptocurrency for this project. It is in the making, it is happening. First contracts signed, public announcements towards the latter part of November. Hold on for that, because this is the departure point where this token price will turn around because of who that is involved in this project going forward. So I'm really excited about sharing a lot about that, but I cannot do that right now tonight. I'm on a really tight disclosure, non-disclosure agreements at this point in time in that. And yes, we will start. You know, we have major publications out there that wants to do articles on us. One of them, for instance, being Fortune magazine. So Fortune magazine wants to do a fantastic article on H2O Securities. And we've asked them now for a month and a half to hold back, because we know what is coming, and we would like to only leverage that quality of a publication. We have got First Wall Street Journal that wants to do a major article on us. We've asked them to hold back on publicizing anything about publishing anything on H2O Securities, because we know what is coming, and we want to have maximum impact, maximum leverage when we can make some of these big announcements in the next couple of weeks. Very good question on this again, and it addresses the price and the complexity of the plant and the type of plant. So plant pricing is subject to a number of things, including the type of technology in use, the type of source water in use, the type of product water required, and the technical and environmental jurisdiction and the regulatory jurisdiction where this plant is situated. So there's a number of things that influence the capex component of a plant. We have benchmarks. Those benchmarks are well proven, well researched by not only us, World Bank, UNESCO, United Nations, Global Water Intelligence, and so forth and so forth. So there's a lot of data on what is the appropriate capex point for a particular plant, which then determines the pricing on that and what the water benchmarking price should be. So, guys, at this point in time, there's another last question here. You are 100% right in terms of our business model. For the last 7 years, roughly, our business model has been that of a partnership. That means we have partners that have committed serious amount of time and capital to be part of this group, part of H2O Securities. We are upgrading that to also include more in-house on payroll staff. We have a roadmap for that, and really I do appreciate this question. So yes, there will be more detailed announcements more around that in terms of permanent staff joining the team. We are going to do a DAO structure because we want H2O Security to grow very wide, very organically. But that does not alleviate the pressure to have some form of knowledge centralized in terms of how to do that. What is important in terms of regulatory frameworks? What is important in terms of water purchase contracts? What is important in terms of risk management or underwriting risk? What is important in terms of ESG standards and so forth and so forth? So we have to have some coordinating effect from a centralized point of view. So that is partly the reason why we have not yet gone out completely on the DAO structure, because we do need to at least give a starting point and a frame of reference of how to make this work. And before we just open the floodgates and let everybody run with developing the model going forward, which we are very excited about. Let it be a living organism. Let us develop this entire project as a complete living organism and grow with it. There are guys on this group that's listening in here tonight that has got access to capital that we don't have access to. There are people on this group that has got access to technology that we haven't got. More importantly, there are people on this group that has got access to influencers and marketing influencers that we don't have access to. These are all of these are opportunities for you to participate and to earn H2ON in the meantime on that. To price your services in the form of H2ON and earn. That is what we can do. All I can do is invite you to be part of it and to grow with us on this initiative. Is there some more questions? Okay. All right.
Particular one around Euro.
Okay, let me go down. How H2O Securities reduce the cost of water and increase the water production globally? All right. So the model is based on the fact that right now there's a shortage of capital. The shortage of capital at this point in time, this is not my figures. These are figures from World Bank and OECD. The total shortfall for water finance around the world is it's approaching $1 trillion a year. That is just to make up the shortfall. That number is literally too big for public sector to pick up. Now, what happens is that the banking institutions come and they cherry pick only the top of the potential financeable projects. And that leaves a gap for a company like H2O Securities or an entity like H2O Securities to help finance more water globally. Now, if we, through our tokenomics model, can increase the yields by recirculating fiat into the system the whole time, adding more water to the network, keeping the tokens finite, as much as possible finite, that means against a finite number of tokens, the demand increases, The demand is constant if you add one water plant, because the demand will always be there for 15 years against that token, fixed token amount. But now add another water plant, which nobody had. There was no new fiat that was introduced into the system for no additional token sales. So now the demand has had a step change and continues along a growth path. Add another plant and another step change and so forth. So that is the reason why you will be able to, using that kind of a model, increase the value of H2O and reduce the actual physical cost, because the return on investment that the investor wants is still dollar-based. But now he gets more bang for buck, so to speak, because his one currency appreciated against the other. The H2O token currency appreciated against the US dollar currency over time. And that means his yield increases pro rata on that. All right, so non-crypto use are very important for the future mainstream adoption. Yes, this is a very good, Sanchez, this is a very, very, very good question. And I think it comes back to my presentation earlier on where I said the 90-10 principle on day one. So we spent the last 9 months to bring the token to life and to bring the token onto the exchanges, to get all of that sorted. And our major effort has commenced last month or during October in our first major roadshow to non-crypto market, non-crypto institutional investors, and so forth. That is commenced. So we are now actively in that mode going forward as well. But we needed to understand that, one, we can get a significant VC to back us on the crypto side, which we have done. The token is listed. We have demonstrated capability. We have demonstrated the model through our POC methodology that it is actually working. I could use that during my presentations in Dubai when I shared and showed investors the impact of a POC plant on our token price, and that made everybody calm, and that meant we can secure the investment going forward. So that was a very important part, and that's the methodology that we've used. We started with the crypto side, and now focusing on the institutional side, which is non-crypto related. Very good question on that. All right, good. Yeah, look, crypto, this is a very good point. No, this is a very, very, very good point. The person here with MWM. When we designed the entire business model of H2O Securities, we designed it around, first of all, the SEC regulations in the US. At the time, it was the most stringent type of regulation. So we really understood exactly what the Howey principle is in terms of utility tokens and security tokens. So we have divided our model. Some of you will remember our very, very, very first white paper, which addressed both tokens, the security token and the utility token, in one white paper. Now, so we know exactly the difference between these two. We've also really got a very, very, very thorough understanding about the regulatory environment, of which Gibraltar is one of the leading cryptocurrency regulators in the world, followed by Malta, and then also the Cayman side. So these are all islands that traditionally are tax havens, but they have sort of led the path in terms of the regulatory environment of cryptocurrencies and crypto exchanges and so forth. So we have a thorough understanding of each of those regulatory environments on that. We will be bringing out, as part of the 90-10 principle, there will be the traditional investment guys. So they will invest and they will be issued a digital security. So that security will be compliant to all the regulatory environments of about 22 different regulatory jurisdictions in which we will be functioning and operating. So that will be there. What we are also, we will share with you at a later point in time, not today, because once we know that our fund license has been approved and we will now understand what is the conditions of our licenses that have been approved, we will then be able to say, right, we can also use some of our H2O to purchase digital securities. Just bear that with us. The news will come. More clarity around that will come at a later stage. but not today, because we need to first get all the regulatory approvals in place before we can say, right, you need to be a sophisticated investor or an approved investor. You need to have certain criteria before you can use X amount of your tokens to purchase X amount of digital securities, and so forth and so forth. Just bear with us. We will share that information as we progress. How will the token payment strategy aid the traditional finance? Okay, very good. So here's the thing. I just mentioned the previous question. I just mentioned the digital security side. So here we have a classic example, a Goldman Sachs. So Goldman Sachs, and guys, I'm using their name, and it's not to say that they have committed or are going to commit or are not committing or nothing of that nature. I'm just using per example. So here we have investment bank. Investment bank says, guys, we're happy with H2O Securities. We will invest $100 million for 20 of your plants, 20 of your 5 megaliter plants, argument's sake. We want to be paid our yields in H2ON because we believe the token can go substantially increase in value. That means our yield will substantially increase in yields for ourselves, for our bank. They can come back with very traditional types of strategies where they put hedges and collars on that yields, saying that we will accept H2ON if it is above 20 cents, and if it's below 20 cents, we want dollar payment yields. So these are the kinds of structures on how the blend of traditional finance versus crypto finance will help to reduce the cost. Because if H2ON value increases, it actually means that the cost of our fiat leverage is going down. That is basically how this will work. I see there's another question coming. Let's just give a moment for JVDB to finish his typing on that. Guys, while JVDB is typing, is there any feedback so far? Any thumbs up? Any happiness? Any concerns? Just explain MC quickly. It's not Master of Ceremonies. JVDB. Oh, okay. Apologies. Sorry. Yeah. You know, the frustrating part of this whole market cap, market valuation thing is the formula that is being used by the coin market caps and the coin geckos of the world, and also the tech screeners of the world. They take your total minted amount of tokens and they just multiply the current price to it. Now, that is a very, very ridiculous way of calculating your market cap. CoinGecko has got a means where they also say your market cap in your circulatory tokens as well, which is the more one to focus on. You are so right in your statement here, because every single time I'm doing a roadshow to institutional investors, and they look at your market cap and they say, freaking hell, you've got a $5 billion market cap and you're only like 5 months old. And then I have to spend 45 minutes of my hour meeting to explain to them how and why this is not a $5 billion market cap. But be it as it may, there's not much I can do about that. There's not much we can do about that. I'm open to suggestions from anybody, but because we've actually marketed or minted the total finite number of tokens up front, and we do not want to go through another remint, we are stuck with that potential issue. Guys, any other questions from your side? I really do appreciate the time. I really appreciate the fact that that you guys are here listening to what H2O Security is about. You know, this project has got far more dimensions than just a very simple, straightforward dimension in the form of gaming or something like that. There are complex dimensions to this. It is what was a very, very, very good experience this past month for me in Dubai with the investor roadshow was the excitement, the true excitement from institutional companies saying that this token really does it for them in terms of blending real world assets with the crypto space. They can grasp the concept of how this could work. It is the very first time that I have not had one negative in my pitches to these institutional investors. So let's just continue to support H2O Securities. If there's ways that you feel you can contribute and help shape the future of this, by all means, participate. Make a proposal. Say to us, guys, I'll do the following for you if you pay me 20 H2O per hour or whatever the case might be. I'm using an example. I'm just using an example. It could be more, of course. But I'm using an example of how I would love you guys to be participating in this business. I want you to feel a part of this business. I want you to feel excited about its growth. I want you to feel, listen, we are all contributing to make this thing a huge success. Yep, that is what we are looking for. Thank you for your time, guys. Anything else that I can answer? That we're good.
JB's got one more.
Yeah, JDB, your last statement about the crypto in Dubai. We are directly part of one of the royal family members. If you Google, you will know who that is. If you Google that, then you will know that we have been particularly selected by that particular royal family member to be part of their global crypto hub that they are creating in Dubai. So they are creating a global crypto hub in Dubai. I don't know if you've seen the news, but they have just issued a request for 100,000 crypto technology specialists to take up work in Dubai, for whom they will issue 100,000 golden visas. But they want the best of the best in the world to resettle and to settle in Dubai to form this global crypto hub. And we are very, very privileged to be part of that establishment of the global crypto hub in Dubai with H2O Securities. So guys, you can be very proud of this because you are part of H2O Securities. Thanks. Anything else? Gone. Have a fantastic evening, guys. Thank you for joining, and till our next meeting. Thank you.